My name is Michael Gayed, publisher of the Lead Lag Report. Joining me there, Amir Adnani, who's the founder and CEO of Uranium Energy Corp, is a, I think, lifelong entrepreneur. I think is probably the best way to describe your history. But Amir, for those who are not familiar with your background, talk about who you are. How did you get involved in the metal space and the uranium space, and what is it that you're trying to do with your company?
Yeah, I guess you could say lifelong entrepreneur. That's one way of putting at it. I came out of the University of British Columbia and got right into building businesses in the natural resources space. In 2005, became absolutely fascinated and fell in love with the opportunity that I saw in uranium sector, which is basically a green energy and a very important part of now what we call the energy transition. 18 years later, I've turned Uranium Energy Corp into what is now the largest diversified North American focused uranium company. Along the way, I fell in love with the royalty business model. So I formed two companies in the royalty sector. The first and only one focused in uranium called Uranium Royalty Corp, and another one in the gold sector called Gold Royalty Corp. I'm also the founder and chairman of Gold Mining, which is listed on the Toronto Stock Exchange. But don't want to sound like there's too much going on. The only company that I'm the CEO of and have day-to-day responsibility for is Uranium Energy, and we're here to talk about uranium. You and I scheduled this, I believe, originally about 2 months ago. Then we had to reschedule it because of things that happened in, I think, both of our schedules. And as luck would have it, you couldn't have timed this thing better, Michael, because we've had incredible turn of sort of stars aligning here the last 24 hours. And arguably the one event and the one country that 10 years ago went through a very difficult moment with Fukushima and turned uranium and the nuclear energy sector into a hated sector has now done a 180. And the announcements coming out of Japan the last 48 hours, I think, are game-changing events for this industry. And it's game on. And it's my pleasure to be talking to you about this live.
Yeah, and we're definitely going to go down that road for discussion. I'm curious, you mentioned 2005 is when you got interested in natural resources. What is it back then that really kind of caught your attention where you said to yourself, you know what, I need to get in on the ground floor or try to think about building your own business? What was the catalyst for you?
Sometimes it's the easy stats. Sometimes it's something so simple yet so profound that just grabs you. And I remember to this day, it was the notion and the logic that for the last 100 years, 1/4 of the world's population has consumed 3/4 of the world's natural resources. And that was before the emergence of the middle class of China and India. And now 3/4 of the world's population that was lagging has to catch up with the rest of the world. That requires natural resources of every kind. And in 2005, when I fell in love with the sector and felt that this was an area to really make a mark in, we didn't have electrification. Tesla as a company was formed in 2005. We didn't have what nowadays BHP and Rio Tinto call forward-looking commodities, future-facing commodities. And so the importance of the role of commodities now in this energy transition and green energy and the role that uranium is playing in all of that, which is a very central role, wasn't even there. Despite all of that, I think what the trend that really caught my attention as a young entrepreneur was that this is not sustainable. That the worldwide demand for commodities wasn't going to play out the same way that it had played out the last 100 years. With China and India's middle classes really emerging and becoming wealthier, they were going to be consuming all types of commodities for their development and forward progress, and that was going to create a very long-term, long-winded bull market in commodities.
I'm curious, how did you self-educate when it came to uranium in particular? I don't recall you hearing that you had graduated with any kind of focus on the energy markets educationally from your studies there, but you go from college to starting businesses and then you get into uranium. Presumably you had to learn about uranium before you got into it. So talk about that journey for a moment, because I think it's interesting to think about how somebody starts a business in what seems to be a fairly not so obvious industry to benefit from.
Probably one memory that sticks out that maybe allows me to speak to your question was the summer of 2005. and I attended a uranium conference that was being organized in Casper, Wyoming. And I sat in to listen to one of the speakers, who was a gentleman named Harry Anthony. And I remember Harry getting up on stage, and he looked around the room, and he said, "You know, guys, about 30 years ago, I gave a similar presentation here in Corpus about uranium mining. And I remember looking around the room back then, and I was the youngest guy in the room. And boy, I look around the room right now, and I'm still the youngest guy in the room." And I remember looking around the room as he said that, and I just saw a lot of white hair, and I thought, geez, like he's right. There's a real generational gap here. There's a real shortage of people. And so at Uranium Energy Corp, when you look at the early days of how the company was formed in 05, 06, I prioritized looking to recruit people, kind of acquiring people as opposed to acquiring properties, which was a very different approach. Normally, as you're probably familiar, Michael, in kind of the world of junior mining or mineral exploration or kind of mineral company startups, it's always about a property or two. And we took a very different approach with UEC. We recognized that there was a shortage of people in the uranium sector. I looked at stats by the Department of Energy that showed in the 1980s there were 30,000 people employed in the uranium industry. In 2005, the number was 2,000. Today is 400. And that to me just forced me and really drove me to focus on team building. And through assembling a team that knew a ton more about the industry than I did, I was able to really build a nucleus, the human capital, that has allowed us to build and turn UEC into the powerhouse that it is today.
Okay, now let's talk about some of the changing trends that you've seen over time in public perception, right? Because obviously we know it's changing more recently, but what really ultimately drives the narrative around uranium? Is it simply time from the last, headline disaster? Is it oil prices? Because, I mentioned catalyst in terms of the catalyst for you getting to the uranium space. Presumably there has to be some kind of catalyst for a change in public opinion. And sometimes time is that, but talk about some of your experiences as far as what you've observed.
I would say in my almost 20 years in the sector, we've gone through we've gone through different mindsets in terms of how people think about nuclear energy. In 06, 07, the buzzword we kept hearing everywhere, the economists would write big articles about nuclear energy, and it was all about the nuclear renaissance. That was the driving force behind the 06, 07 bull market in uranium. And the public perception, I think, was around really this notion that nuclear was making a comeback. There was, again, this renaissance. There was a lot of talk back then about the upcoming end to what was called the Highly Enriched Uranium Treaty, the agreement between Russia and the US to dismantle Soviet-era warheads. And so there was this dynamic around nuclear energy, which was still almost like trying to connect to the past. It was about this sort of legacy issues around where nuclear power was coming from, but seen in a very positive way. Then it all turned on its head with the nuclear accident in Japan with Fukushima. It became a hated sector. You had Germany exit, you had Belgium exit, you had a number of companies and countries exit the nuclear energy field. You had premature closures in the United States of nuclear reactors. We went from 104 operating nuclear reactors in the US to about 94. And so it was truly a nuclear winter. It lasted for an unusual long time for as far as bear markets go. And it went on from 2011 until really recently over the last year. And what seems to have put nuclear energy back into the spotlight, okay, its central role and focus is a whole other set of variables, in my opinion, than what was happening in 2006 when it was the nuclear renaissance. So to begin with, first of all, today, more than any other time in history, the public opinion polls show that the support for nuclear energy from a public opinion poll point of view is at an all-time high. That has been driving policy in Washington that's actually bipartisan in support of nuclear energy. That in turn has also driven policy in the European Union, whereby recently the European Union has ratified and the European taxonomy and has voted, and member states have included nuclear energy along with natural gas in the European taxonomy. These have fundamental, long-lasting effects in a positive way for nuclear energy. What did the bipartisan support in Washington do for nuclear energy? It has meant that in the Inflation Reduction Bill and the infrastructure bill, when you add it all up, there are billions and billions of dollars now committed to supporting the nuclear reactor fleet in the United States, in addition to standing up foundational pieces like the National Uranium Reserve in the US to buy strategic stockpiles of uranium for the government account. You got to go back to the 1950s to see this type of to find any kind of precedent for this. Then you layer on top of all of that the fact that we have priorities in the world today driven by electrification, driven by decarbonization. And I think the movement in the carbon market, the voluntary pledges that were made by corporations, more than anything else that we've ever seen in the compliance market for credits, has been another kind of really game-changing point for nuclear, because the more net zero pledges are being set by governments and corporations, the more everyone comes to the realization that the only legitimate, intellectually honest answer to decarbonization is nuclear energy because of its baseload capability and attributes, something that renewables don't have. So now all of a sudden you see the starting lineup, and the starting lineup for any environmentalist, anyone who's concerned about climate change, is renewables alongside nuclear energy. That's your starting lineup. And that starting lineup role that nuclear power is now getting coming off the bench is creating a profile that is setting, again, unprecedented growth for nuclear energy moving forward. And that brings us to Japan. And the news in the last 24 hours that we started this conversation with has to do with the fact that the public opinion polls in the country that was the center of the most negative potential event, the Fukushima accident of 2011, that the public opinion polls and the public sentiment in that country turned so much the other way in support of bringing nuclear power back, that the prime minister and the politicians finally said, not only are we going to bring these reactors back, and remember, Japan prior to Fukushima had the third largest nuclear fleet in the world, still one of the largest fleets out there. But they don't want to just bring the reactors back on. They actually want to now turn their attention to building new generation of reactors as well. And you might ask, well, what happened? What drove all of this? And when you think about it, if people are asked to keep their air conditioning units below certain limits, and they're asked to consume only so much power a day, and there's all these restrictions on life, then at some point you kind of get up and say, geez, I've kind of had enough. Is there any other solution? And it's like, well, look, we got these perfectly safe, perfectly ready to go turnkey reactors that we shut down, and they've been absolutely reviewed to death to make sure that they're safe and that they can come on and operate effectively. Why don't we bring them back on? Oh, and by the way, look at how Russia has kept Germany and Western Europe hostage to its natural gas and energy resources. With winter coming, do we want to be a hostage to anyone? Or do we want to make sure that we're in charge of our own energy destiny? And you look at all these variables, you look at what's going on in the world, you look at Russia's invasion of Ukraine, and you add it all up. And I think we have a backdrop, we have a dynamic here that I never thought we would see, in terms of so many key issues kind of lining up to support and drive nuclear power forward. And it's unusual, but it's exciting.
Do a thought experiment with me for a moment, because you mentioned obviously Fukushima and then Germany responding. How much more different do you think the electricity backdrop would look if Fukushima never happened, which then sparked all this political kind of drawing down of nuclear initiatives? Would the conditions still be there for an elevated, electricity prices for Europe, but just not as high? I know this is hypothetical, but I think I'm always fascinated by how you end up having these secondary and tertiary effects, which are unintended when some kind of major thing happens, and then you have multiple responses to that major thing.
Nuclear power was widely accepted and being embraced throughout the world pre-Fukushima. That sort of nuclear renaissance we talked about was starting to really take shape. And you could argue, as part of this thought experiment that you just posed, that had Fukushima not happened, many countries in the world, including Germany, including Western Europe, would have not only kept their nuclear power plants, but they may have even added to it. And what you got to remember with nuclear power is that nuclear power is synonymous with energy security for two fundamental reasons. For anyone listening that's not familiar with this, first of all, nuclear power plants utilize very small amount of fuel to operate and generate energy. So for comparison, 3 barrels of uranium can generate the same amount of energy as 300,000 barrels of oil. And so nuclear has, and uranium has, this incredible energy propensity and the ability to generate energy 27 from the same fuel load. So once you load a nuclear reactor with fuel, that power plant can generate electricity continuously, 24/7, 365, up to a year to as long as 18 months before a second reload. And so nuclear energy equals national security. But in addition to that, it also includes and equals green energy because it's entirely emission free. Now, coming back to the thought experiment. So had Fukushima not happened, arguably more reactors would have been operating, more reactors would have been built. And more reactors operating and more reactors being built would have increased the collective security of nations who are today vulnerable and are being taken hostage by Russia's weaponization of Russia's energy resources, including gas, including oil. And arguably, it's a terrible thing because at the same time that we're a hostage to Russia's oil and gas, we're also a hostage to Russia's uranium because the United States on an annual basis is still heavily dependent on Russian nuclear fuel, is sending billions of dollars of US dollar cash to Russia annually, which is basically funding war. And so all of that could have been reversed. All that could have perhaps been curtailed, maybe not entirely eliminated, but maybe it could have reduced this strength and this leverage that Russia seems to have. I think anything to do with areas that are new innovation and kind of research that can improve how we generate electricity and energy from other sources than hydrocarbon is promising. I think it's promising and interesting to see the areas of research with thorium and see how that gets developed. As I'm sure you're fully aware, the marketplace that I speak to when I talk about uranium demand are existing reactors or reactors that are being built that are designed to utilize uranium as a fuel. And that market is about 440 operable reactors strong and growing, with another 60 reactors under construction and another 150 or so planned. There is not such a foundation for thorium-based reactors. So thorium-based reactors are still very much an R&D concept. The country of India for a long, long time experimented with this more than any other nation due to their issues to access to nuclear fuel based on their stance with the Non-Proliferation Treaty at the IAEA. And we're never able to solve that. And in fact, when you see the latest announcement out of India over the last 24 hours, which was ironically at the same time as the Japanese announcement, it's to further expand their nuclear power base with building additional reactors. So I'm a big fan of seeing areas of new innovation and technology, but I don't think so far we have seen that thorium-based reactors can be built or commercialized on a wide scale such that it gains traction and becomes a real thing. So I think it remains an interesting part of R&D. And I think when it comes to waste, it's another area that the combination of reprocessing or recycling, I think this is a really key area to pay attention to. I mean, in the US, for example, reprocessing and recycling is still banned. It's banned based on a presidential decree that was signed by President Carter. So it's quite dated, you could argue. And so these are areas that, again, I think as the sector resumes activity and more capital becomes available to reactor owner operators, there could be innovation in these areas to try to improve the efficacy of how the different fuel types and also better management of the spent fuel.
Okay, let's talk about ways of accessing the theme or the play overall. So obviously you've got Sprott's fund with URA for the direct access to uranium. And then, of course, you've got companies, stocks, for example, your company. And I'm sure, given your own experience with the gold and gold mining side, that you've probably had many people observe, which is valid, this idea that just because gold, for example, has a big up move doesn't mean gold miners necessarily have a big up move, that it's not exactly sort of a levered way to play gold, even though that's often kind of a one-liner that's out there. I'm going to presume it's a similar dynamic with uranium, that it's, when you think about the stock side, of taking your company out of the equation for a moment, that the equity is correlated to the price of uranium, but not entirely, because there's always other company-specific factors. What are the drivers from what you've seen in terms of equity movement for the uranium space as opposed to the commodity movement in the uranium space?
The equities tend to be very sensitive to macro news, which may not necessarily be having the same kind of impact on the underlying commodity price. I think the best example of that is the last 48 hours. So let's just talk about that, because that's a good sort of, that's one scenario, right? So here's a scenario where we had the news come out of Japan 48 hours ago. The news again was Japan's shift in terms of their shift back to nuclear energy, wanting to restart reactors and wanting to build a new generation of reactors. Very positive news and kind of a game-changing type of news. Most uranium equities in North America and Australia in the last 24 hours, not so much today, but let's just say yesterday. Today they're giving some of these gains back. But yesterday we're up anywhere between 15 to 20%. We're up as much as 30% in Australia. Those are big moves. What did the commodity price do? What did the uranium price do? It went from $47.75 a pound to $48 per pound. Almost a non-event when it came to the commodity, but the equities had an outsized move. That's one scenario. And the equities tend to be, in many instances, much more reactionary and much more sensitive to macro events like the situation in Japan, perhaps more so than the underlying commodity. We do have points in time where, for example, with the introduction of the Sprott Physical Uranium Trust, you've seen the Sprott Physical Uranium Trust raise capital, build a war chest of cash, as they do utilizing their at-the-market program that they have. They raise cash when they trade at a premium to net asset value. And they may be out there buying physical uranium, and they'll be buying physical uranium. But mind you, they haven't done it in a number of months. But when they were more active a few months ago, they may be active buying physical uranium. You see physical uranium move up. But if oil is having a down day or there's a broad equity market sell-off, uranium equities end up trading with the broader equity market. I used to kind of tweet about this and say, oh, uranium equities are like the baby and the bathwater, kind of all being thrown out together. So even though the underlying commodity, the uranium price might be flat or even inching higher, you see the equities just trade in line with the S&P 500 or commodity stocks. If oil or gold are having big down days, it seems like uranium can't yet decouple itself from the commodity bandwagon. And it sort of makes sense to me because the combined market cap of all publicly listed uranium equities globally is still around $20 billion. That's very small. In 2007, at the peak of the uranium market at $140 per pound, there was probably over $120 billion of combined market cap globally. This time around, I think when we get to peak uranium prices, which I project to be about $200 per pound at a minimum, we see an environment where I think you're going to have much larger combined market cap of all uranium companies, mainly because Kazatomprom, Kazakhstan's state-run uranium mining company, is public now, and they weren't a public company back in 2007. So there's definitely more size there to attract. But and then there's the third scenario, and the third scenario is that you're going to see the commodity price up and the equities up together, and that correlation isn't completely isn't completely absent. It is also very much, and on many instances, a scenario like we see in oil or silver, copper, gold, where you get a big move in the commodity and the equities follow suit. And in most cases, there's a lot more torque and outperformance in the equities than there is in the underlying commodity. But the first two scenarios I mentioned as well shouldn't be lost on us.
And I recall hearing you say that in your case, you don't hedge the uranium exposure. Talk about that, because obviously that relates to sensitivity to uranium prices.
Don't get me started on that. I almost need you to host or be kind enough to invite a couple of other people to maybe another chat like this, and to bring maybe some of the company's representatives that hedge, namely a company called Cameco, and for us to kind of duke this out and have a debate about it. This drives me crazy about the uranium market. It drives me crazy that the big companies in the sector, it really just being one, Cameco, for the longest time have advocated and keep talking about hedging, the importance of signing contracts to place the uranium into the hands of utilities. Had this not been the prevalent kind of way of doing things in the uranium market, had they not signed contracts back in 2010 before Fukushima happened, the market would have rebalanced so much faster after Fukushima. One of the issues we had post-Fukushima is you had companies like Cameco that had signed long-term contracts. So even though you have this horrendous event that causes a supply surplus and demand to fall, spot uranium prices fell to $20 per pound, and contract prices by the likes of Cameco were held at $45.50. Well, you might say, well, good for them. They get to sell their uranium at a higher price than spot. Well, sure, they did for a few years. Eventually, those contracts ran out, and it forced even a company like Cameco to have to shut down its best mine, McArthur River, inevitably in 2017. And it didn't exactly help the equity performance, and I don't think the shareholders won. Yet it delayed the inevitable. The inevitable was we had uranium surplus in the market, and the faster people were shutting down mines and reacting to that, the faster the market would have rebalanced. And to this day, we live in a world where when you look at the biggest mining companies in the world operating way bigger mines than what we have in the uranium industry, take BHP, take Rio Tinto, they would tell you they don't believe in hedging. They don't want to hedge anymore. Hedging has cost companies and shareholders negatively over many decades of market and economic history and data. And yet in the uranium business, we're still operating like it's the 1980s or the 1990s, talking about contracting. So we've taken a very entrepreneurial approach. We've taken an approach that says, we're going to be unhedged. We're going to be 100% unhedged because we want to make sure whatever upside there is in the market, we can capture for our investors. And that ultimately we want to be a very nimble company, and that, being 100% unhedged isn't really a bad practice. This seems to be an unusual practice in the uranium sector, but it's an extremely common practice in other commodities. And this is a big topic, and it's an interesting one. So, I think in the previous bull market, I think in 2007, for example, when uranium prices ran to $140 a pound, the likes of Cameco were selling uranium at $50 a pound. So the opposite can happen too, where you can leave a lot of money on the table if by way of these hedging contracts and hedging in general. So to answer your question, yes, Uranium Energy Corp, UEC, my company, we're 100% unhedged, and there are not many companies in the uranium sector that have this very kind of bullish stance that we're not giving up the upside, and we remain 100% unhedged.
Okay, so Amir, you mentioned Cameco. Talk through the landscape in terms of competition for a moment. Is there such a thing as having a moat when you're in the uranium industry based on something location-wise or something regulation-wise? Because I think there's I'm going to assume there's a lot more nuances to company operations in uranium than in other larger sectors of the economy.
If I go back to when I first got into the business, there was the consensus was, and it wasn't just in uranium. You may have sort of seen or heard it in other commodities as well. The consensus was that, well, If you try to develop projects and permit projects in North America, it's going to take longer on permitting. But geez, we can go to Africa, we can go to Central Asia, we can get things done so much faster. And as a result, when you look at 20 years ago, 30 years ago, majority of the production growth, so new mines that were built in Africa, in Namibia, in Niger, in Central Asia, in Uzbekistan, and primarily in Kazakhstan. Kazakhstan is a country, and its uranium story is a story, Michael, that you must understand if you're going to understand the investment thesis in uranium. And why do I say that? This is a country that came out of nowhere to dominate the production scene in uranium. It came out of nowhere. In the 1990s, these guys were producing 5 million pounds of uranium annually. And today they're producing over 40 million. I mean, the numbers are even more than that if I put in the consolidated basis as opposed to all the joint ventures that they have in the country. And so to put it in perspective, today, compared to Saudi Arabia and the oil market, Saudi is like 10% of the oil market in terms of production. And Kazakhstan in the uranium market is almost 35% of global production. They're not the equivalent of Saudi Arabia in oil. They're like a single nation OPEC in uranium. And their production growth has all taken place primarily in the last 20, 25 years. And a lot of people need to understand is that a lot of people different uranium market. We would have had not only a much larger structural deficit, but we would have had to develop many more new mines that were basically shelved and delayed as a result of sort of this Kazakh miracle. And the Kazakh miracle has its roots in the Soviet Union era. A lot of the deposits that were developed and drilled to the point of being production ready in Kazakhstan were developed at the expense of basically Soviet Union. Soviet Union was the backer of these projects during the Cold War days. And a lot of these projects basically just did not need to pass the test of economic viability. They were a strategic resource for a country that was in the middle of a Cold War with the United States. And so you fast forward to today and you say, well, what does the world look like now? What are the things that we care about today? And it's like, well, okay, we have this thing called ESG. We have the situation where Russia's invaded Ukraine, and every day there's a Western company that is exiting Russia and doesn't want to be there anymore. We have this thing around transparency and best practices and making sure everything's being done on a sustainable basis. And so where can you actually go in the world where all those practices can actually be implemented and where you have geopolitical stability? And the answer is not only North America, but it's North America at a time where North America missed the last 30 years of uranium mine development cycle because all the capital and attention went to, again, Africa and Central Asia and the East. So I think that the priorities of what we're looking for and what utility customers hopefully should be looking for have changed dramatically. There are, no doubt about it, still utility companies in the United States today that are buying uranium from Russia. But I think it's going to look really bad for them to continue doing that. I think it's going to look really bad for a company like Exelon, let's say, which is the biggest US nuclear utility. You should have them on your podcast and ask them this question. But they pride themselves in having a very strong sustainability practice. What the heck does a sustainability practice mean if you're buying the fuel to run your reactor from a country that's waging war and killing innocent civilians and children literally on a daily basis through the shelling that they're doing of homes? What about the shelling that they're doing, the Russians, of a nuclear power plant in Ukraine, which is, by the way, definitely a negative thing altogether, but it's highly irresponsible. It's just so irresponsible. If you're a Western utility, you're going to continue buying uranium from the Russian government, the same Russian government that basically is shelling a nuclear power plant in a very irresponsible way, shelling innocent civilians. This does not seem like a really smart idea, right? So I see a scenario where US utilities will come to their senses and will voluntarily stop these purchases. Now, let's say they don't come to their senses and matter needs to be taken into other people's hands. There's a bill in the US Senate right now that is got bipartisan support. There's a companion bill also in the House that's proposing to ban Russian uranium imports. And sooner or later, I believe this bill will gain traction and this bill will advance. And when it does, you end up in a situation where the world's largest supplier of uranium and nuclear fuel, which is Russia, which I don't care what anyone says, they absolutely control Kazakhstan, the world's biggest producer of uranium. Earlier this year, when Kazakhstan was having a tough time managing protests on their streets, the president of the country said, open fire on innocent people to their security forces. Which country stepped in, Michael, to stabilize Kazakhstan? It was Russia, not China, not the United States. It was Russia. This was news. This isn't a conspiracy theory. This is just news. What I'm talking about are facts. And based on these facts, we're going to sit here and pretend that Russia doesn't control Kazakhstan, that we should just continue to be heavily dependent on foreign imports. And Michael, for your audience, for those that don't know, the US is 100% dependent on foreign imports right now. There's no uranium mining in the US. Uranium prices in the US to make projects economically viable need to be north of $60 per pound. The price today is $48 per pound. Even Canadian mines are going to struggle at $48 per pound and are not going to be built. And so moving forward, I think we have a bifurcated market developing for the first time in a long time. This bifurcated market is going to be an East versus West. There's going to be a premium on Western pricing that can basically come with reliability, with best ESG and sustainability attributes documented around it. You know, my company has come out, for example, and committed to net zero uranium mining. Net zero. We're going to be talking about this in our inaugural sustainability report that's going to come out later this year. The Russians, on the other hand, are shelling a nuclear power plant in Ukraine. They're killing innocent people. If you're sitting there, you're looking to buy a pound of uranium from a Texas mine that's talking about net zero and is giving out scholarships to local students to go to get a math degree and a science degree. You're going to buy uranium from us or want to buy a pound of uranium from a country that's killing people? And when you make that determination, and you might say, well, geez, I might have to pay more for that pound of uranium that Amir has in Texas and Wyoming. You got good news. Good news for you is if you're a utility company, you just got billions of dollars of credits from the US government in the Inflation Reduction Bill and in the infrastructure bill. And you are right now printing money. You're making excellent return for your shareholders. And it doesn't matter if you pay $50 a pound or $200 a pound for uranium. It makes up less than 5% of your operating costs. So do the right thing. And I think that is the trend that I'm really banking on and I really believe strongly. And I think it's a trend that everyone will end up doing the right thing ultimately in the US and in the West. And when they do, there will be a premium on North American uranium. And that premium has no lid on it. This isn't like oil. If oil goes to $150 a barrel, you basically damage economic growth and you damage people's ability to drive and go places because it's hindering economic prosperity. Uranium isn't like that. It's inelastic pricing, and you can have $200 uranium, you could have $150 uranium. It's no difference to the bottom line of an existing nuclear power plant. Look, it's a great question, and I don't want to, there's a part of me that wants to talk about all the positive attributes of in-situ recovery mining. It's smaller footprint, it's not earth moving, it has naturally less impact from a standpoint of how much space it takes, and the upfront capital requirements are in the tens of millions of dollars compared to hard rock mining these days, where it's $500 million to over billions of dollars, right? However, it's not fair for me to just frame it that way. Why? Because you can't just do in-situ recovery on every deposit. There has to be amenability to the in-situ recovery process in a deposit, meaning uranium deposits that are low grade, situated in a sandstone setting, with enough confining layers above and below the deposit, with enough hydraulic permeability. That stuff you just can't make up, right? That's Mother Nature. And what we know about the world uranium geology today is that there's only certain parts of the world where there are deposits that are amenable to in situ recovery, and where those areas are great, companies can take advantage of that. But I don't believe that there are enough in situ recovery amenable deposits moving forward to satisfy demand. And hence, I think the realities of conventional mining, which is much more capital, it is what it is. It's open pit underground mining, and it will take more capital. It will take more space. You have to deal with tailings and waste rock, etc. But we also have an environment out there where conventional mining can be done in a very safe and responsible fashion. And yes, it will cost more, but that's the reason why we need to see higher uranium prices. So part of the reason why we've also constructed the UEC portfolio now the way we have, where I've been focused on in situ recovery for the last 18 years. But if you look at the last acquisition that we made with acquiring UEX in Canada's Athabasca Basin and basically got ourselves a portfolio of high-grade conventional projects, is because I think really the right blend moving forward is combining low-grade in situ recovery with high-grade conventional mining. No, I hear you. But again, I go back to the amount of uranium we can get from in situ recovery. So in situ recovery will set the margin with the first wave of demand that comes in. Remember, there's 200 million pounds of annual demand. Right now, we're mining 130 million pounds annually. Half of that is in situ recovery. So where's production growth going to come from? So when you look at the cost curve, right? First quartile cost, second quartile cost, those projects will go first, right? They'll be economically viable first. And so perhaps the first 130 million pounds of demand will have a marginal cost of production that might be closer to $45, $50 per pound. But not all supplies needed to meet 200 million pounds of demand will be in that segment of the cost curve. So as we go into third quartile costs to help bring on the next 50 million pounds of demand to start to bridge the gap between the 130 million of supply and 200 million pounds of demand, now you're talking about incentive levels being closer to $65, $70 per pound. So it really is about sort of looking at the totality of supply demand, and that this will be a gradual process in terms of how I think that supply demand will build up. Well, I mean this with all due respect to the Canadian listeners, and I'm a Canadian myself. But while China might exert significant influence in Namibia and Russia has significant influence in Kazakhstan, you could argue that the U.S. exerts influence with its neighbor to the north. And so I think for the U.S. market, it's going to be a major drive here to see the growth and expansion of domestic supply. So U.S.'s own uranium mining, combined with growth in Canada, and we have to just really pause and quickly take note of what is there in terms of mineral endowment in North America. And to do this, we also need to look at a bit of history. In the 1980s, early 1980s, late 1970s, the United States was the largest producer of uranium in the world, and in fact, the uranium exporter. Southwestern U.S. states of Colorado, Utah, Texas, Wyoming, New Mexico have this longest standing history of uranium exploration dating back to the 1950s. So the data set is rich, which guides future exploration activities. And really, when we think about the mineral endowment, you look at the reports that have been published in the last 5 years by U.S. Geological Survey, there are hundreds of millions of pounds of undiscovered uranium potential that the USGS has identified and written about in technical papers in states like Texas and Wyoming. Furthermore, when you look at Canada, and this is something I've never understood in the life of me, is when you look at return on investment, if you're financing a conventional mine, would you want to finance a conventional mine where grade is everything at 0.03% uranium in a place like Namibia versus 3% uranium in a place like Canada's Athabasca Basin? And so I think the US has a major competitive advantage in the fact that Canada sits as a neighbor to the north and happens to have in northern Saskatchewan, a province in the middle of Canada, grades of uranium that are 100 times greater than the average grade of uranium in the world for conventional mining. This is a tremendous competitive advantage. I think the US is absolutely fine from a standpoint of looking for future uranium supplies and finding them within their own borders and to the and within the potential of Athabasca Basin in Canada. And I think, like everything, these things take capital and a sufficient uranium price to incentivize. And I think in this cycle, there is sufficient capital and there will be a sufficiently high enough uranium price to really incentivize North American uranium mine development, which was entirely ignored for 20 years, which was the 20 years of the beginning and end of the Russian HEU. Michael, again, I want to really make certain impressions on people on this chat. And one thing I want people to pay attention to, because companies don't talk about it anymore because it's a thing of the past. But sometimes key events of the past are actually what sort of informs our view moving forward. Go back and listen to and read about the highly enriched uranium agreement. This was an agreement that lasted for 20 years. It was the equivalence of the world's largest uranium mine. It started in the early 2000s, ended in around 2014 or 15. It began earlier than that as sort of a experimental process to see how you can take highly enriched uranium and blend it down to low enriched uranium. This is what killed North American mining. This is what killed US mining, because the geopolitical imperative to demobilize Russia's nuclear forces. I mean, 23,000 warheads were dismantled. This was important, and it was an important issue to address after the collapse of the Soviet Union, but it came at an expense. And the expense was that it basically destroyed the domestic mining industry. But it's all now coming back, and it's a cycle, and it's coming back because now, after that issue has been addressed and enough warheads were dismantled, we now need to go back to the business of building domestic capabilities again. Because again, as we've talked about, we cannot be relying on Russia or Kazakhstan for this. And so that's where I kind of some attention to. Myself, along with the chairman of my company, Spencer Abraham, who's a former United States Energy Secretary, and 3 other companies in the US, had the privilege during the Trump administration to present the case for uranium to Wilbur Ross, at the time the Commerce Secretary, and to provide enough information that ultimately led to a report, which is a bipartisan report that was published in 2020. I encourage you to look it up, because the entire manifesto of the United States government that guides decisions moving forward is in this report, titled Restoring America's Competitive Advantage in Nuclear Energy. It has 3 key findings. Number 1, the US has ceded its leadership in the global nuclear energy field to China and Russia. Number 2, it has to regain that, starting by building domestic uranium capabilities. As a result, it's recommended that the US establish a uranium reserve. And number 3, the US should lead the area associated with small modular reactors, because this is the way forward for nuclear energy. That manifesto is, in fact, what is playing out right now. The critical minerals do not have a national stockpile registry that has been set up yet. Uranium has really been elevated, in my opinion, to a higher place of strategic importance. The government has pledged that it should purchase $1 billion worth of uranium in the next 10 years. And in the last few months has already tendered to purchase the first 1 million pounds of uranium. This is happening. This was spelled out in the 2020 report that the Department of Energy put out. Bill Gates has just announced a $750 million raise for his TerraPower, which attracted $250 million from the South Koreans, who announced that they're now got the contract to build more reactors in Egypt, and all of which is now the foundation of some of the SMRs that are being built in the state of Wyoming. When I met with Governor Gordon of Wyoming last week, he's so enthusiastic about the fact that not only does Wyoming mine and plan to become the solution for uranium mining and supplies to the US, but he wants to see the state become the center of development of SMR. It's the first of its kind. Bill Gates' company is building an SMR in the state of Wyoming, right? And what we love to say in that state is that, Wyoming has what the United States needs, and it's energy, it's uranium. And finally, when it comes to China and India, look, China and India, through their state-owned companies, had predatory strategies that looked to corner the market in uranium mining and nuclear reactors over the last 15, 20 years. So the US, in fact, is absolutely right in recognizing that and calling this out. I think that the place that uranium has in strategic thinking of government, honestly, is in a more elevated position than where the collection of, let's say, rare earths are. Rare earths have their own critical issues. They are on the strategic or critical mineral list. I'm not here talking about how we're going to go restore that or build to address that. Other people Michael can bring on can do that. But I think uranium, you need to look at it as a very strategic energy commodity and something that the US government has spelled its manifesto out, and you can go see that, and it's all playing out. I mean, Dan, I guess I'm sort of the poster child for consolidation, because my company, Uranium Energy Corp, has been the only company in the sector that has been acquiring and other businesses and making acquisitions. It's 8 months ago, we stepped up and acquired a company called Uranium One. It was in the news a lot over the last 12 years. It was the largest U.S. uranium company, but it was owned by the Russian government. Before Russia's invasion of Ukraine, we were fortunate enough to cut a deal with the Russian government. We acquired Uranium One from them, from their state-owned nuclear energy company, Rosatom. That deal closed December 2021. That was a $120 million acquisition. And just earlier this week, we closed the acquisition of another uranium company called UEX. And that basically marks the second successful M&A transaction for our company in 8 months, but the only two M&A transactions of size and significance in the entire uranium industry globally, not only in the last 8 months, but in the last almost 5 or 10 years. So the sector is just coming to life, and companies that I think are putting their money where their mouth is, have a vision, are spelling it out like we are, but also executing it through M&A, are going to find that M&A is important, because there's only so much organic growth you can realize, as you appreciate, then, in a short time span. And when we're being told by the US government and utilities that they needed our uranium yesterday, we need to accelerate the rate of growth. And one way to really accelerate that is to find accretive acquisition opportunities. We've done our part. We're very well set up now as a company in terms of what we have in our portfolio, in terms of production in the US and fully permitted projects and production facilities, and a pipeline of high-grade projects in Canada. But I bet you that you're going to see larger uranium companies conduct M&A. And I'll make one other prediction. I bet you what you're going to see is you're going to see big oil and gas companies enter the uranium sector, because big oil and gas companies used to be in the uranium sector. They founded the uranium sector in the United States. Projects that I own in Texas and Wyoming used to be owned by Chevron, used to be owned by Texaco, Mobil, Conoco. These were the founders of the uranium mining industry. Uranium is an energy commodity. Oil and gas companies are energy companies, and they need growth, and they need growth in areas that will be seen by their institutional investors as being green and emission free. They're under pressure to do this. And nothing is more ESG friendly, nothing is more of a green energy commodity than uranium. And so forget Cameco and Kazatomprom. They're the two big companies today. I think the big players are yet to enter the sector. And I believe those are going to be the bigger oil and gas and energy companies. And that's when you're going to see, in my opinion, real, true consolidation.
This has been a phenomenal conversation. Everybody, again, please make sure you follow Amir. Amir, I appreciate your time. I know you're a busy man. And everybody, enjoy the rest of your day. Thank you, Amir.
Thank you. Thank you, Michael.
Cheers.